Good morning. I'm Jayapayas. Today, let us discuss cash flow statement. It's very easiest chapter. It carries 6 mark problem, 5 marks practical oriented, and 2+1 theory. Yearly, nearly 10 or 12 marks are there. First, let us see in this case meaning, its objectives, its user, cash flow activities, under that types. First one operating activity, next investing activity, next financing activity, and cash flow from operating activity how it is calculated. First one direct method, next one indirect method. First let us see what is cash flow statement. It is a statement which shows inflow and outflow of cash and cash equivalent from various activities which are called as operating activity, investing activity, or financing activity of a company during a specific period. In general, in shortly, how cash comes into the business, how cash out of the business is found out by preparation of cash flow statement. Next, let us see its objective. It is prepared for the purpose of knowing the information about cash flow, and also it is prepared to know how the amount of cash flow, to know the amount of cash flow for the particular period. Next, let us see its objective, its users. First one, to ascertain the ability of the firm to generate the cash. Next one, it helps to balance the cash inflow and cash outflow in the business. Next, let us see cash flow activity. In our enterprise, there are three activities. One is operating activity, next investing activity, third one financing activity. Next, let us see each activity. First one operating activity. It constitutes main activity of the enterprise. The main activity is called as operating activity. In this case, cash inflows, cash outflows are as follows. Cash inflows are cash sales of the good, cash received from the royalty, fees or commission. In this case, cash outflows are as follows. Cash paid to supplier, cash paid to employee, paid insurance premium, paid income tax. Next, let us see investing activity. What it is? It's relating to the purchase or sale of long-term asset. If you say long-term asset, that one is called investing activity. And in this case, cash inflows and cash outflows are as follows. Cash inflows, share or debenture sold for cash, interest received in cash, dividend received in cash. Okay. Next, let us see cash outflows. In this case, fixed asset purchased for cash, share or debenture purchased for cash, advance or loan paid to third party in cash or cash outflows. Next, let us see financing activity. It results in changes in size and composition of the owner capital and borrowing capital or borrowing of the enterprise. That's called financing activity. In this case, cash inflow, cash outflow are as follows. Cash inflow, shares issued for cash, debentures issued for cash. Cash outflows are as follows. Loan received in cash, interest received and dividend received. Next, let us see cash flow from operating activities, how it is calculated. In this case, there are two methods. One is direct method and there is indirect method. First, let us see direct method. Under direct method, cash flow from operating activity is calculated as follows. First one, cash received from customer less paid to some suppliers and employee. Therefore, cash generated from operation less income tax paid. Therefore, cash flow before extraordinary item and less extraordinary item. Therefore, net cash flow from operating activities. Next one, second, indirect method. Under indirect method, cash flow from operating activities is calculated as follows. Net profit before tax and extraordinary item and non-cash and non-operating items which are debited to profit and loss account, such as depreciation, amortization, preliminary expense written off, discount on issue of shares or debenture, interest on debenture, loss on sale of fixed asset, underwriting commission. Less non-operating incomes credited to profit and loss account, such as interest received, dividend received, rent received, profit on sale of fixed asset. The difference is called therefore operating profit before working capital changes. Working capital changes. After that, add and less. Add what? Decrease in the value of current asset. Increase the value of current liability. Next one, less. Increase the value of current asset. Decrease the value of current liability. The difference is called, therefore, cash generated from operation. Cash generated from operation. Less income tax paid. Next one, less income tax paid. Next, add or less extraordinary item. Therefore, the difference is called, therefore, net cash inflow are used in operating activities. Thank you. Let me continue tomorrow.